As a business owner, you also deserve to be paid. After all, business owners are the hardest working individuals in the planet. And as the law of economics dictates, and I quote, "For labor to be considered productive, it must be paid for." This video is for entrepreneurs and small business owners who want to know how they should pay themselves in their own business. And by the end of this video, you'll be able to know why it is important for you to pay yourself as a business owner. Factors to consider when you are paying yourself, and the payment options that business owners can use to pay themselves. So make sure that you stick around until the end of the video. My name is Dr. Emmanuel Amukun with the Smart Business Classroom, a channel that is dedicated to helping you start, run, and grow your business. So if you are new here, make sure that you hit subscribe and join the family. And if you have already subscribed, welcome back and let's ride on. So why is paying yourself in your own business important? Among other things, how you pay yourself has an impact on the taxes that you pay. I touched on this subject when I was talking about how to dodge taxes legally. If you haven't watched that video, you can click right here right now and you watch it, then you come and continue with this, or you can wait until the end of the video. I will link it and then you watch it after this one. Also, without paying yourself, the health of your business is not accurately reflected. Why? Because it is missing a major expense, and that is, you guessed it, your pay. And without including all the expenses in your business, you won't be able to make major decisions in your business. And not having a pay allocation for yourself also means that if by any reason you're not able to work in your own business and you have to put somebody in your position, that person will also not have a pay. Oops. So even if you decide that you're going to start working for free, which is actually advisable when the business is just beginning, you still have to factor in your own pay. And when the business starts to boom, then you can even pay yourself the areas that you didn't get when the business was still beginning. Having agreed that paying yourself is important in your business, you might be asking, so how do I pay myself? What do I pay myself? And how much do I pay myself? And so many other questions that I may not know. And it can get really confusing, right? I know, because I have been running a small business since 2013. So you can agree that I really know how confusing it can be. But no worries, today I give you the answers. First of all, never consider paying yourself too early in your business, because if you do that, it makes you a bloodsucker of your business. Yes, you heard that right. Money is the blood of your business, and taking it out too early will lead to the death of your business from a condition I like to call business anemia. Yeah, I made that up. But yes, once your business runs out of cash, then it leads to its death. As a matter of fact, more than 90% of all businesses die because they simply ran out of cash. That's it. So the most important question to ask before you start paying yourself is this: is your business making enough money? In other words, do you have enough cash for all your operational expenses and some extra? If the answer is yes, then you are ready to pay yourself. And that means it is time to choose a payment method. And when it comes to payment methods, you basically have two options. The first one is salary. The second one is a draw, or what we call the owner's draw. Another word that means the same would be a distribution. Well, with a salary, that means that you allocate a specific amount of money that you're going to pay yourself at the end of a specific period that we would like to call payday. Just like you are going to pay any other person that is working in your business. So you also pay yourself. But for the draw, it means that you are going to pick money from your business whenever you need it. Each payment method has its own advantages and disadvantages, which you can consider before you choose which payment option you want to take. The third way, though, how business people pay themselves is by using a mixture of the two, a salary and a draw, if the nature of your business allows it. And talking about the kind of your business, the ultimate choice of the payment option for a business owner largely depends on the type of business that you own. If it is a sole proprietorship, that means that you and the business are one and the same. And that means all the profits of the business are yours. And all the losses are yours. All the debts of the business are yours. And all the assets of the business are yours. And vice versa. And in this case, the preferred payment option is a draw, where you just take money as and when you need it. A sole proprietorship, however, should not be confused with a single member limited company. I'm going to get into that shortly. If you are finding any value in this video, please make sure that you give it a thumbs up. And if you haven't yet subscribed, hit that subscribe right now and join the family. Why not? Secondly, if it is a partnership. With a partnership also, the partners of the business are one and the same with the business. It is just like an extended version of a sole proprietorship. So the losses of the business are shared equally by the partners, just as the profits are shared equally with the partners. So the method of payment, preferably in this case also, is a draw. Business type number 3 is the limited liability companies, what they call LLCs. So if the limited liability company is a single member company, you can still use the draw method. This specifically applies mostly if you are not working in your business. And the difference between a single member limited company and a sole proprietorship is the legal registration. A single member company is a separate entity from the business owner. In other words, the business assets and liabilities are separate from the owner of the business. Unlike in the sole proprietorship, where the business and the business owner are one and the same. So in that regard, if the business owner of a single member company also works in the business, then he becomes an employee of his own company. And in this case, he can take a salary as an employee and then take a draw as the owner, what we call the owner's draw, or you can also call it a distribution. So if your business is a single member company business and you're working in your business, then you can take a salary and take a draw as well. If the limited liability company is a partnership, then you can still use the partnership method. And just like in a single member company, the business is separate from the partners, unlike in the other partnership, which is not a limited liability company. That also means that even if you are one of the partners and you are working in the business, you can still take a salary as an employee of the business, and then when you take the draw of the profits, you also get a share from the profits. The fourth kind of business categorization is the corporations. And the preferred method for payment in corporations is the salary. But if it is a corporation where there are shareholders, what is called the C corporation, then if you are the business owner and you have shareholders, if you work in the business, you can take a salary as the employee of the business, and then When the members are sharing dividends, you also get dividends as a shareholder. So you, as the business owner who has shareholders in your business, gets both the salary and the dividend. Under corporations, we also have what we call the S corporation. With the S corporation, the preferred method of payment is salary plus distribution. Please note that if you take a salary as a business owner, your salary is actually taxed just like for any other employee in that business. But when you take a distribution, you do not pay tax on your distribution because your business would have already paid the tax on that income. Now, having chosen your preferred payment method, then how much should you pay yourself? That's the big question. Well, I can't tell you that, but what I can tell you is this. You can decide on the amount after determining the net profits of your business, not the gross profit and not the revenues. Then you can preferably choose a fixed percentage of your net profits, and then you pay yourself that. And that also means that if the business is booming, that percentage will translate into more money. And if the business is not doing very well, it will dwindle. But that's okay, because you'll be taking the money without hurting the business. Other factors that can help you decide on how much you should actually pay yourself as the business owner are the growth stage of your business. That is, if your business is either starting or it is somewhere grown or it's a mature business. At each of these stages, you might decide to pay yourself differently. How much money your business is making. Of course, you cannot just take out money without knowing how much it's making. If it's making more, you take more. If it's making less, you take less. And then something we call reasonable pay. Actually, this is determined by the tax bodies. They have what they call reasonable pay. And each tax body has its own definition of what they call reasonable pay. You might want to check that out before you run into trouble with them. And then, your personal expenses as the business owner. When you have reached a point where your business can pay you, you want to look at the expenses that you incur as a person. In order to avoid stress, you would want to pay yourself enough to cover all your personal expenses and a little extra something. Happy paydays! See you in the next one.